Good day, everyone, and welcome to Admiral Markets and Forex Street joint webinar. So today I will show you how to trade with Heiken Ashi and range bars, and I wish you all a huge welcome from my side, and thanks everyone for your support and for your follows. I read all of your tweets, I read all of your emails, and sometimes, guys, if I don't send anything in the moment, you just need to remind me, send me an email again, and then I usually send the indicator and templates to you. So you need to know that I'm always available, but sometimes, well, there's no much time to respond immediately after your emails. So welcome again to today's webinar. I will show you how to trade with Heiken Ashi and range bars. I will show you a system that is developed with a couple of indicators. Of course, we will use Heiken Ashi range bars, and you will see that actually it's not hard to trade, but you need to be focused on some things, especially the angle on EMAs that I will show you. Before we begin, standard risk disclaimer. You need to be well aware of all risks associated with Forex trading. We CFD and Forex trading. Those are leveraged products and can result in losses that exceed your deposit. This is not part of .co.uk website, but the globaluse.com website. Forex is risky business, and by accepting the risk disclaimer, you're also proceeding further with me. And as always, guys, I tend to be a bit straightforward when it comes to explanation of the system. We don't need to circle around just explaining the theory craft. We need to actually be we need to cut to the chase and show the right away what we are gonna be dealing with. So today, as I say, a bit of a straightforward webinar. So trading with Heiken Ashi, range bars, and explanation of indicators. First of all, we will use range bars indicator. I can send you, everything is shareable, so if you want to have this template and the indicators, you can ask for it. The thing is that most of it you can find by yourself, but let's say if you cannot find it, I'm there to help you and share this with you. So first of all, we will use range bars expert advisor. There are a lot of different indicators on the market that can show range bars on your chart. Have in mind, guys, that range bars are actually offline charts. And the best thing is to have an indicator that can show offline chart or an expert advisor that runs on, let's say, 1 minute time frame that can print out your range bars on MT4. It's very easy to use. It's simple. MetaTrader 4 is definitely my favorite platform to use and to trade from. And also, I have had only positive experience so far with MT4 platform. I don't have any other indicators than for MT4, and I can never use anything except MT4. Only when I traded on big institutional accounts, we used a custom platform. But now, of course, when you trade with brokers, you use usually MT4. There are other platforms, but I don't have the indicator for it. So let's say focus on the indicators for MT4. Why I'm telling you this? Because from time to time people are asking me, can you send me an indicator for Ninja Trader, for, I don't know, C Trader? I don't have it. Okay. So range bars expert advisor, okay, it's pretty much simple to use. It does not clog your platform. It does not freeze your platform. It's good on your memory, on memory of your computer. So actually, I can say that this expert advisor is one of better when it comes to range bars chart. Also, we will use 3 different EMAs. We will use 30, 50, and 100 EMA. Why 30, 50, and 100? Because so far I've been watching the angle of EMAs compared to Heiken Ashi and range bar combined, and I can say that this combination of EMA works good. Some traders prefer to use 200 EMA, some prefer to use 60. I think this is a very good combination, 30, 50, 100, triple EMA. And also, guys, it's you will see it's different, slightly different than when you use a normal standard Japanese candlesticks. Next indicator that we will use for this system is stochastic 4 in 3-3. Of course, this is definitely, guys, something that I prefer to use when dealing with range bars and Heiken Ashi stochastics, because stochastic is momentum indicator. Okay, stochastics is a leading indicator. It's not lagging. It's leading indicator, and it shows momentum in forex market. So by using stochastics, you're actually following the price. Okay, so you are following the price, and usually when it comes to stochastic, we can say that it's a very good in multiple time frame momentum spotting. But now, guys, because we actually will use this system for intraday trading and intraday perspective, I might advise that we stick to 4 in 3-3, simply because pullbacks on these EMAs are slightly deeper when you use stochastic 4 in 3-3. Some traders argue that 5-3-3 is good, 8-3-3 is maybe the best, 4 in 7-3. You know, guys, you can have different stochastic setting. But the thing is, you can experiment with it. 4 in 3-3 is something that has a deeper pullback within the concept of the angle of these moving averages, and 5-3-3, in my opinion, is something that traders will usually use for scalping in the market, or something that does not require a bigger pullback. So 4 in 3-3 is something that I use here. Of course, Heiken Ashi, and of course, I advise you to use Admiral Markets Pivot Point. In order to use Admiral Markets Pivot Point, you need to have, guys, MT4 Supreme Edition. Now, for all of you who don't know what MT4 Supreme Edition is, let me tell you that MT4 Supreme Edition is a breakout in technology on Admiral Markets platform, and it's it actually empowers your trading. Now, I don't have time to actually explain all the features of MT4 Supreme Edition, but let's say, guys, that MT4 Supreme Edition has mini terminal, trade terminal, tick chart trading. You can withdraw your money directly from MT4. You can connect it with news. You have custom indicators, very useful indicators. You have trading simulator, mini chart. So a lot of different tools you can use and benefit from. So you can actually try it 30 days free. Okay, next thing is, what is actually the benefit of using Heiken Ashi? For traders who don't know what Heiken Ashi is, well, we need to align momentum. So Heiken Ashi candles are actually they both display momentum and trend, and the calculation of Heiken Ashi is something that is totally different than calculation for standard Japanese candlesticks. So in order to use Heiken Ashi effectively, you need to understand that all of Heiken Ashi candles should be color coded. So it's not like Japanese candlesticks. I mean, we all use different colors when we deal with Japanese candlesticks, but let's say that colors are more important with Heiken Ashi candles. Simply because I personally prefer to use blue as bullish candles, red as bearish candles, and also when I use Heiken Ashi with a blue color, I know that that momentum and trend is to the upside. Then when I see red Heiken Ashi candle, I know that it's either retracement within a trend or maybe it's a reversal. So you will see. Definitely, it's very easy to use Heiken Ashi, good candles, nice. Try to experiment with it. I know also that I am now currently also, guys, in development of so-called Omega system. Omega system should be based on 4-hour time frame trading. And why I call it Omega or Omega? Simply because I prefer Omega watches, and I think that the Swiss-made watches are very precise, and because of that I want to make this system, Omega system that I've been creating, very, very precise, like a Swiss watch. So one of the reasons I call it Omega, it does not need to have anything with Omega watches, but you know, that is my favorite brand. So that is what I will call my system, Omega or Omega Forex, just not to get a copyright copyright from Omega factory. So definitely I will use a Heiken Ashi in Omega system, and you will know, this system will be announced when I complete it. My testing is always done on live account. I don't use demo accounts for trading systems, guys. Everything is on live account because you know, guys, if you want to trade successfully, you definitely need to you definitely need to use live accounts. So when you make a system, if you create a system, and if you are a system creator, you need to test it on live account, not just by back testing it. It's not, you need to forward test. You need to do live trades on it in order to see the efficiency of a system. Okay, so let's get back to the main subject. I like Heiken Ashi candlesticks, and definitely there are a lot of different approaches to Heiken Ashi. One of the approach is to combine it with range bars that I'm showing this to you now. Another thing is they show retracement. Retracement, guys, is loss of momentum. What is a loss of momentum? Simply said, new traders they don't understand the basic principles of trading. Trading, guys, is this. This is normal price movement. Okay, we will always see thrusts and pullbacks in the market. Thrust and pullback, thrust and pullback. These pullbacks here are actually retracements. So what is retracement? My definition of retracement is it's a loss of momentum. Simply put, every trend has a retracement. Okay, every trend. It does not mean that the trend will reverse. So when you see that prices, let's say we have an uptrend and price is dropping, it does not necessarily mean that price will reverse, because before reversal we have retracement. Okay, so when market is going up, this fall of price usually means that the price will be bought afterwards. So it's called retracement. Trend change or reversal is something totally different. So Heiken Ashi candles are great in showing a loss of momentum or so-called retracement. It's very easy to spot when retracement has been done and when new trend or when current trend actually will appear. And we'll start to with a continuation pattern. So that is why we use retracement, to actually continue with the trend. Heiken Ashi candles also show you the trend. They are easy with trend spotting, much easier than standard Japanese candlesticks. So I might say that for new traders who are not deeply into trading, Heiken Ashi is something that they can work with, and that can be pretty much easier than to deal with standard Japanese candlesticks. It also, guys, it's very easy to spot tops and bottoms. And I use trend lines also on Heiken Ashi. You will see how it's easy to use. The rules, guys, for this system will be explained live, okay? So I will not use PPTs to show you the rules. I think the best is to explain it live. Now you can read quickly about Heiken Ashi candlesticks. I will leave you a couple of seconds so you actually will understand what this is about, what candlesticks are about. So sellers are dominating in a strong downtrend, buyers are dominating in a strong uptrend. You see, it's different from Japanese candlesticks. Wick to the downside on a bearish red candle actually means that this is strong momentum and trend to the downside. Wick to the upside and candle like this means that the trend is strong to the upside. So it's different from standard Japanese candlesticks. So you need to understand this concept. This means that the trend is getting weaker. Usually these candles are so-called indecision candles. Now, next thing is, with a change of a color of a Heiken Ashi candle, usually trend is changing. It does not mean necessarily that the overall trend has changed. But let's say, guys, for this system, EMAs will tell us if the trend is changing or not. And Heiken Ashi candlesticks will tell us if we see a retracement in the market. So that is why it's important to combine some of the indicators when trading Heiken Ashi and range bars. It's not that easy to trade naked. I personally have never traded naked with Heiken Ashi or range bars simply because something needs to tell me about trend. And range bars are, again, different kind of beast. I will explain it during next slide. Okay. So these are, guys, range bars. Each range bar must have a high or low range that equals the specified range. So each range bar must open outside a high-low range of the previous bar. Each range bar must close at either its high or its low. And with using range bars, we always have predetermined range on price. So whenever a certain pip number of candle is printed out, your range bar will also be printed out. So let's say that we use 6 pips for range bar. It means that every single candle here will have 6 pips inside it. So the main benefit of using range bars is that range bars are totally time frame independent. That is why MT4 actually uses offline charts, because standard time frames are incorporated into MT4 platform. But in order to use different time frames, you need to use offline charts. And offline charts are run through, let's say, different expert advisors or scripts or indicators. I will show you a range bar expert advisor, but definitely, guys, it's very easy to set it all up. You just need to know that for this system, we use 6 pip range bars. So this means that 6 pip here, that every single candle will have 6 pip in it, and it will be color coded with Heiken Ashi. Okay. Also, what is important with the system is the separation angle of these EMAs. This means that the trend is good and it's very tradable. This means that we don't trade it. So EMAs in this example tells us that we also restrain from trading. Always remember my words, guys. Sometimes, and very often, not having a position in the market equals to having a profitable position. Because not each day is for trading, guys. Sometimes you want to open a trade, you want to, let's say, gamble a bit. Let me tell you, I don't have anything against gambling in forex market. Still, you can make money, right, if you want to gamble. But if you use a professional approach, you will then heed my advice and you will not trade every single setup. Unless, guys, you are very addicted to trading and you really want to trade just for your, let's say, for fun. Because I know a lot of people who trade for fun. They don't need any money or anything from trading. They just trade for fun. It's you know, it's like some sort of excitement to them, and they are occasional gamblers. But let's say that professional approach tells us that not each day is for trading. Some days are good, some days are bad. If you see a bad day for trading, then guys, switch to higher time frames. Don't chase the market to lower time frames. Use range bars. Scalp with range bars. It's much better than to use, let's say, trend-based system in a ranging market. Okay. So this angle separation of EMAs will tell us if the market is tradable or not. This is the ideal angle, guys. When you have all of these 3 EMAs perfectly aligned. So this is called so-called ideal angle. And have in mind that we also have at the bottom zone of EMA that is premium zone. Why? Because when price gets here, usually within this zone between 50 and 100 EMA, let's say in uptrend, this is most likely that buyers will appear here. But still, if we get a confirmation inside first and second moving average is 30 and 50, we can have a profitable trade. But usually price tends to retrace a little bit deeper and then go up. It's because now moment buyers prefer a deeper retracement in order to buy the price subsequent. You need to know that banks, most of banks usually trade higher time frame charts, guys. I personally have one of my best friends worked for major bank in risk compliance, and now he's a full-time equity trader. I always mention him on my seminars and webinars because really he's a guy who taught me a lot about equities markets and how actually banks trade. Okay, and I also traded for a big company, UK company. Back in days I was also trading with institutional accounts, and I can really say that most of trades are done on higher time frame trends, higher time frame. Some banks prefer shorter time frames, but most of those banks prefer higher time frame. So what it means, when you see that price is retracing, let's say we have a big uptrend and price is really retracing a lot, it means that all these market movers are actually closing their positions here, and every single close of a buy position is automatic sell into the market. You need to know that is how market functions. Every close of sell is automatic buy, every close of buy position is automatic sell into the market. Okay, so that is why you need to understand the concept of retracement and the concept of buying on dips and selling on rallies in the trend, because big fish actually make the trend. You cannot make the trend. None of us can make a trend. Only big money makes a trend. We can just follow that trend. So now I will show you a real chart and show you how you can actually trade the system. My advice is, as I said, to use Admiral Markets pivot points. They're very, very good in spotting those turning points or profit zones. So how do you set this all up? First thing, guys, you need to have M1 running, and here you see we have range bars expert advisor. So once you put your expert advisor on your chart, you also need to have auto trading here enabled, okay? Because if this is not enabled, you won't be seeing anything, guys. You won't be seeing anything. So you need to enable auto trading, okay? Now, next thing is to go to expert advisor properties, and here, guys, you need to place 6 on bars range and 6 on time frame. Actually, here on time frame, you can put whatever number you want. This is just for easier reference, because when I use 6 pip range bar, I usually put 6 pip time frame for an indication that my range bars are 6 pips. Then you click OK. You go to File. You go to Open Data Folder. Then, guys, sorry, I made a mistake. So you go to File and Open Offline. Here, Open Offline Chart. Here you need to find Euro Dollar M6 because you used 6 as the name for this offline chart. So we need to find Euro Dollar M6. Here it is. It shows 430 bars. You click on it and say open. Then when you go to open, this will be shown. Okay, you will be shown normal chart, and then you go to a template, load template, and then you can actually load my template that I can send it to you. But it's pretty much easy. If you have Heiken Ashi indicator, you just need Admiral Market pivot points, and you can set it up yourself. So the main thing here, I want you to understand how we use these offline charts. Let me show you once more. Okay, here, let's see, DAX. We can use actually Australian dollar yen, for example. So here we need to put expert advisor. Okay, so we go to range bars expert advisor. Here we will use 6. Okay, 6. We will use 6, and then, guys, when we press OK, Okay, here we go to File, Open Offline, and we need to find Australian dollar yen M6. Let's see, Australian dollar yen M6. Here it is, M6. We say open, guys, here. Now, when we said open, we actually need to load our template. And our template, guys, is actually the same as we had it here. But let's not use it now. I just show you this for purposes how to open offline chart. We will stick to euro dollar for this showcase. Okay. So, annual market pivot points, you can also use it like this, open annual pivots and press time frame for pivots daily pivots, because these 6 pip range bars correspond to daily movement of range bars. Okay, so it's important for you to understand that 6 pip range bar is something that we use on daily pivot points. Okay, you can change this if you want, but I don't recommend it. But just you can see that everything is customizable, even the font of this indicator. Now, how you trade the system? First, you need to see the angle. Here, guys, we see that the angle is not good. So euro dollar is not tradable. But let's say just for example that we traded euro dollar yesterday. Okay. So here we can say show lines all the way across chart just for easier reference. So here, guys, here actually we see a separation, a divergence of the angle of these EMAs. And here, guys, we can see that this is a switch. So this is when uptrend has started. You can easily place a trend line here, okay, and see that when this trend line is broken, you will usually see the confirmation of stochastic. What I do usually, I either trade by stochastic cross from from below 20 to above 20, or a trend line break. This is easier, and you will usually see that stochastic will lead the price. So this is where you could have bought euro dollar yesterday. This is the first entry. Now, if you miss this entry, here you have a second entry. Now, guys, it's important for you to know, you need to wait for a blue candle to be printed out. Okay, it's important. You cannot just enter randomly. You need to see if candle actually goes into this zone here. It can go slightly lower like here, but next candle should be bullish, and stochastic should also show you that the price is, let's say, oversold. Because in uptrend, you want price to be oversold. You're not buying resistance, you're buying support, okay? That is important in trend trading. So you're buying supports, guys. Very, very important for you to understand that concept, okay? Don't be confused with it. Also, guys, here you see stochastic cross, but well, sometimes you can also use confirmation from a trend line break. Here you see trend line break happened actually here. I mean, you see how easy it is to spot trend line breaks. You need 2 touches for this trend line, and here actually you see breakout, and then pair went in a strong uptrend. Here, guys, when you see that first 30 EMA will start to change the angle. When this 30 EMA start to change the angle, then you don't trade anymore. So this is not a valid trade. You need to have this perfectly aligned as I explained. Okay, here also, guys, you see this is okay, but this here, guys, is not tradable. This is tradable here. You see how the angle on these DMAs is good. So your entry could be this one, then your entry could happen here. Okay, even here, guys. Okay, here, because the angle tells you that the market is tradable. If this market is not tradable, it will show this, or this will intertwine these EMAs. It's not good. This is not good to trade now. So that is why we stick to EMAs to show us, just to show us those zones where to buy the price, and how to align the trend. Have in mind, retracement is always red in uptrend, and you want to see blue Heiken Ashi breaking from stochastic or from this trend line in order to buy. Your profits are usually twice the support or resistance. In this case, my final target would be probably here, and my stop loss goes 5 pips below the last low or 5 pips below the last support. In this case, guys, let's say if I'd made my entry here, for example, my stop loss would have been placed 5 pips below the support, because here stop loss is very, very close. Really, I mean, 11, 12, 17 pips, much better 19 pips stop loss. You can remember, guys, your stop loss is fixed and your risk is dynamic. That is how you can treat the price. So your stop loss is fixed, and your stop loss is dynamic and your risk is fixed. That is very, very important for you to understand, okay? Now I will show you one more example, and if you have any question, guys, feel free to ask me. Let's use, for example, we can use dollar yen on 1 minute. Here I will show you how to open euro yen template and chart. So here we go to euro yen, we press 6, we play a time frame, also we enter 6, then we go here, file, open offline, then we search for dollar yen 6 M6 here, okay, open, okay, here we have it open, and then, guys, we will apply our template, okay, so here you see this is M6, and of course, if you don't have Admiral Pivot Indicator, you should download it. It's not included in the package that I will send, because you need either to have a demo account or real account with Admiral Market. So here it is. What I can say, this was tradable setup. I mean, you can see this was tradable setup, very, very, very obvious. This is your short trade, and well, the price has gone now 14 pips in profit, but considering how market is low today, it's still good to trade. Also, guys, this was good setup here. Okay, here, just watch the angle, guys. The angle is important. When you have a good angle like this or this, it's tradable. Here, guys, very good angle, but sometimes when trend is so strong, you won't be having deeper pullback into premium sell zone. Here, a good entry, another good entry. Here, guys, the angle, perfect angle here, very good angle here. So what I suggest is you need to practice with this system. You need to practice to spot a good angle, because if you don't spot a good angle, the chance is that you might miss very, very good setups. So my advice is try to spot good angles first, try to demo trade it, and if you're successful with it, go live. Here, guys, your stop loss is here. Here, your stop loss is either here or here. You can experiment also here with stop loss. I don't use bigger than 30 pip stop loss on this system. So with this example, I would probably use maybe 30 pip here. Or if you go a little bit aggressive, you can put it 5 pips above red moving average. Because if the trend is okay, this is the final resistance where the price should definitely turn. Okay, so you see there is a lot to be done with the system. Try to trade it. If you have any questions, just email me and I will answer the question. I will send the template, whatever you need, guys. I'm here for you. Okay, I don't see any questions, so I guess everything is clear. You can also use this system for scalping. If you are into scalping mode and you see that market is not moving a lot, well, for example, we can use 14 pips now, close the trade, or we can actually scale out, put the rest to break even, and enjoy a free ride. There is a lot of trading opportunities during the day, and we usually will find something that is very tradable. So that was everything from me for this time. I hope that you enjoyed the webinar. Follow me on forex3.com, admiralmarkets.com. My Twitter handle is TarantulaFX. follow my analysis. Usually they're very, very accurate. And I hope to see you again, guys. So cheers. And as always, trade safe.